Have you ever wondered why Bitcoin's price seems to surge dramatically after certain events? Imagine this: Bitcoin has historically skyrocketed in value after every halving event. But what exactly is a Bitcoin halving, and why does it matter to investors? Bitcoin halving events are pivotal moments in the cryptocurrency's history. Roughly every 4 years, the reward that miners receive for verifying transactions on the blockchain is cut in half. This reduction effectively slows down the rate at which new Bitcoins are created, making each Bitcoin scarcer over time. In this video, we'll delve into what Bitcoin halving is all about, why it happens, and its significant impact on Bitcoin's price trajectory. We'll explore historical patterns, examine how investors have responded to these events, and discuss key strategies for navigating Bitcoin's halving cycles effectively. Understanding Bitcoin's halving events is crucial for anyone interested in cryptocurrency investing. By the end of this video, you'll have a clear grasp of why these events are regularly and eagerly anticipated by the crypto community and how they can potentially influence your investment decisions. Bitcoin halving is a fundamental event programmed into the cryptocurrency's protocol, designed to reduce the rate at which new Bitcoins are generated. Specifically, approximately every 4 years, the reward that miners receive for validating transactions on the Bitcoin network is cut in half. This process started with the initial reward of 50 Bitcoins per block and has successfully halved, with subsequent halvings reducing the reward to 25 Bitcoins, then 12.5 Bitcoins, and so on. The next halving is expected to further reduce the reward to 6.25 Bitcoins per block. The economic rationale behind Bitcoin halving revolves around two key principles: scarcity and the preservation of Bitcoin's deflationary model. By reducing the rate of new Bitcoin issuance, halving events ensure that the total supply of Bitcoin grows at a decreasing rate, ultimately capping the total number of Bitcoins at 21 million. This scarcity is stark in contrast to fiat currencies, which can be printed or created by central banks without such limits, leading to inflation over time. Bitcoin's deflationary nature is seen as a hedge against inflationary pressures and a store of a value akin to digital gold. Bitcoin has experienced several halving events since its inception. The first halving occurred in November 2012, reducing the block reward from 50 Bitcoins to 25 Bitcoins. The second halving took place in July 2016, further reducing the reward from 25 Bitcoins to 12.5 Bitcoins. The most recent halving occurred in May 2020, cutting the reward from 12.5 Bitcoins to the current 6.25 Bitcoins. Each halving event has had a profound implication for Bitcoin's price trajectory and market dynamics. Historically, these events have been associated with significant price increases for Bitcoin. For example, following the 2012 and 2016 halvings, Bitcoin saw substantial price rallies within months to years after the events. These price surges are often attributed to the decreased rate of new supply entering the market, combined with increased demand and market anticipation. Bitcoin halving events have historically been significant catalysts for price movements. Analyzing historical data reveals distinct patterns in Bitcoin's price behavior before, during, and after each halving cycle. Prior to a halving event, there is often a period of anticipation and speculation among investors. This anticipation can lead to a gradual increase in Bitcoin's price as market participants buy in anticipation of potential price appreciation post-halving. During the halving event itself, there is typically heightened volatility as market dynamics adjust to reduced block reward. After the halving event, the historical data suggests that Bitcoin has experienced substantial price rallies over the ensuing months to years. For instance, following the first halving in November 2012, Bitcoin's price surged from around $12 to over $1,000 within a year. Similarly, after the second halving in July 2016, Bitcoin's price increased from approximately $650 to nearly $20,000 by the end of 2017. Halving events significantly influence market sentiment and investment behavior in the cryptocurrency space. The price buying the rumor, selling the news aptly captures the phenomenon where investors anticipate price increases leading up to the halving events and may sell off shortly after to capitalize on short-term gains. This behavior contributes to short-term price volatility surrounding halving events. However, despite short-term fluctuations, many investors view halving events as bullish signals for Bitcoin's long-term prospects due to the event's impact on supply dynamics and scarcity. Cryptocurrency analysts and experts often emphasize the significance of halving events for Bitcoin's long-term value proposition. These events are seen as mechanisms that enforce Bitcoin's deflationary supply schedule, reinforcing its store of value narrative akin to digital gold. Analysts point out that by reducing the rate at which new Bitcoins are introduced into circulation, halving events contribute to Bitcoin's scarcity, potentially driving up demand and prices over time. For instance, experts have noted that the combination of reduced supply growth and increasing global adoption has historically propelled Bitcoin's price to new heights following halving cycles. Analysts also highlighting how halving events serve as milestones that underscore Bitcoin's resilience and the maturation of its ecosystem, attracting institutional investors and mainstream attention to the cryptocurrency markets. Investing in Bitcoin around halving events requires careful consideration of both short-term volatility and long-term potential. Here are some practical strategies for investors. Hodling, or long-term holding. Many long-term Bitcoin investors advocate for hodling through halving cycles. This strategy involves buying Bitcoin and holding onto it for an extended period, irrespective of short-term price fluctuations. Historically, hodlers have benefited from significant price appreciation in the months and years following halving events, as reduced supply often leads to increased demand and higher prices. Dollar cost averaging (DCA). DCA is a strategy where investors regularly purchase Bitcoin at fixed intervals regardless of price fluctuations. This approach helps mitigate the impact of short-term volatility by spreading out purchases over time. By consistently buying Bitcoin, investors can potentially capitalize on both dips and peaks in the market, averaging their purchase price over the long term. Diversification. Diversifying a cryptocurrency portfolio beyond Bitcoin can help spread risks across different assets with varying risk profiles. This approach allows investors to hedge against volatility specific to Bitcoin and capture opportunities in other promising cryptocurrencies or blockchain projects. Investing in Bitcoin during halving cycles comes with inherent risks that investors should be aware of. Volatility. Bitcoin is known for its price volatility, which can be amplified around halving events. Price swings can be significant in the short term, potentially leading to both substantial gains and losses for investors. Regulatory uncertainty. Regulatory developments can impact Bitcoin's price and adoption. Changes in regulations or government policies regarding cryptocurrencies could affect market sentiment and investor confidence. Market speculation. The hype and speculation surrounding halving events can influence short-term price movements, and investors should exercise caution and avoid making impulsive decisions based solely on speculative trends. When considering Bitcoin's long-term potential post-halving, several factors come into play. Institutional adoption. Increasing institutional interest and adoption of Bitcoin as a digital asset and store of value could provide sustained upward pressure on its price over time. Institutions view Bitcoin as a hedge against inflation and geopolitical uncertainties, adding legitimacy to its role in diversified investment portfolios. Macroeconomic trends. Bitcoin's finite supply and decentralized nature position it favorably in a world of expanding monetary supply and fiscal stimulus. Economic uncertainties and geopolitical tensions may drive demand for alternative assets like Bitcoin, reinforcing its long-term value proposition. Technological advancements. Ongoing advancements in Bitcoin's underlying technology, such as scalability solutions and improvements in transaction efficiency, could enhance its utility and adoption globally. The 2016 Bitcoin halving event, which occurred in July of that year, marked a significant milestone in Bitcoin's history. Prior to the halving, Bitcoin's block reward was reduced from 25 Bitcoin to 12.5 Bitcoin per block. Leading up to the event, there was a notable increase in market anticipation and speculation among investors, as historical data suggested potential bullish outcomes post-halving. Following the 2016 halving, Bitcoin experienced a substantial price appreciation over the subsequent months and years. The price of Bitcoin rose from around $650 in mid-2016 to nearly $20,000 by the end of 2017, making an unprecedented bull run that captured global attention. Investors who bought or held Bitcoin before and immediately after the 2016 halving saw significant returns on their investments, underscoring the potential benefits of strategic positioning around halving events. The most recent Bitcoin halving event occurred in May 2020, reducing the block reward from 12.5 Bitcoin to 6.25 Bitcoin per block. The 2020 halving event took place amid growing institutional interest in Bitcoin and heightened market volatility due to global economic uncertainties. In the aftermath of the 2020 halving, Bitcoin initially experienced a period of price consolidation and volatility. However, as the supply shock from reduced block rewards began to take effect, Bitcoin's price gradually started to appreciate. By the end of 2020 and into early 2021, Bitcoin surpassed its previous all-time high, reaching levels above $40,000 per Bitcoin. This price surge demonstrated a continuation of the historical trend where halving events contribute to bullish market sentiments and price appreciation. When comparing the 2020 halving with previous cycles, similarities in price patterns and market reactions can be observed. Both in 2016 and 2020, halving events were followed by significant price rallies, albeit with varying degrees of intensity and timing. These cycles highlight recurring themes in Bitcoin's market behavior, where reduced supply through halving events often correlates with increased demand and price appreciation over time.